Hello, Future Millionaire. This is an unusual video. Today's Sunday, so I'm making a slightly longer video about a topic I normally don't talk about. I'm inspired about this topic by a friend who told me about this person's intention to purchase a $2.2 million property in Melbourne. That's all I can say. So you are my friend. You hear this cue, you know I'm making this video specifically for you, but also for everyone else who owns real estate in the world, not just in Melbourne or Gold Coast or anywhere else. All right. So here's what's going on. Here, I have a friend who I know for a long time, who I trust very much, and this friend is in the process of purchasing a property which I do not know anything about other than the fact that this property will cost $2.2 million dollars, and the first offer has been made and it got rejected. That's all I know. I don't know the location, I don't know the size, I don't know the shapes, whatever other information. All I know is the price, all I know the first offer got rejected. So the reason I'm making this video is I want to remind this friend of mine that you should evaluate your situation before go ahead with your next offer. Because naturally, if you want to chase down this property, you have to make a higher price offer to entice the seller to sell the property to you. Wouldn't that be the case? Now, I know nothing about this property, and actually it doesn't matter to me whether you buy the property or not. It's not my business. It's your money, your choice. It's your future. Here's the thing. I want to give you certain information that I want you to evaluate before you go ahead with purchasing a $2.2 million property. And the same thing goes for everyone else out there. The reason I started the video talking about my friend instead of talking about you in the US, or Europe, or any other country, or in Australia is because I want you to understand there is a personal motivation for me behind this video to tell you the truth, nothing but the truth. And only at the very end of this video, I will address the crypto market. So if you want to know my latest thinking about the crypto market, just stay on, because today is Sunday. You got nothing else better to do, right? You might as well just join me here for a chat. Now, to my friend here, before you purchase this property, have you evaluated what's the impact on the property market in Australia based on the interest rate rise that's coming up? So when the interest rate goes up, it doesn't sound like a lot. Sometimes people say, okay, the interest rate is going to go up 1.5% or 2%. That doesn't sound like a lot. But in reality, what you're going to observe, because we came from historically the lowest possible interest rate and mortgage rate in Australian history, what happens is that the mortgage payment is going to double or even triple. Because in Australia, there's no such thing as fixed mortgage for 50 years or 30 years. At the most, you can fix for 5 years. Usually it's 3 years. And a lot of people, just to lower the mortgage payment, they actually have a flexible mortgage payment. Also, historically, the rate has been falling. Therefore, the standard behavior of a person who go into a mortgage condition is he wants to have a flexible rate, so that when the rates continue to fall, he can benefit from the changes in the interest rate. Now, that has changed. The mortgage rate in Australia is going to go up, skyrocket. This is already baked in stone. The central banks already made very clear the mortgage rate is going to go up. The banks is clearly going to pass on the mortgage increases. And now the indebtedness of the nation is at all-time high. I'm not going to go into detail because the other YouTube channel can tell you more about those. I'm also not a mortgage specialist, so don't sue me for any of this. By the way, none of the things I'm going to say is financial advice, so just be fully aware. I'm doing this for entertainment purposes. I'm a stupid idiot on the internet who know nothing else about what I'm talking about, other than I've done probably 100 real estate deals all combined in my life. Yeah, other than that, I'm not qualified. Okay, and I have, by the way, never lost money in real estate. And I am the record holder for the lowest price ever transacted in Gold Coast. I'm also the record holder for lowest price transacted in Tasmania for oceanfront property, and a few other records in Singapore and so on. So, but don't listen to me, of course, because I don't want you to sue me. Okay, here's the fact. Interest rate. Interest rate determines about everything else what you're going to do. And interest rate determines about every other players in this market. So the mortgage rate is going to go up significantly, not a little bit, significantly. I expect the combination of higher interest rate, higher mortgage rate, combined with higher gasoline cost, higher energy cost for heating, cooling, higher food costs. So inflation is going to go through the roof. So because inflation goes through the roof, the central banks worldwide have no choice but to increase interest rate even further to combat those inflation. Now, you would think that if interest rate goes up, inflation goes up, housing price should go up too. However, the housing price increase will not catch up to the affordability decrease, because in the moment, in every household has only a fixed budget. Nobody has a printing press at home unless you have secret printing machine at home printing cash. You don't have a machine at home printing the government issued currency, right? You don't. So let's say everybody has a budget. Even the millionaires have a budget, not to say the average Joe. So the mortgage payment is part of the budget. Now imagine in your budget, let's say this is your budget, the whole thing is the budget. In that pie chart, in the budget, the mortgage rate is going to go up, which means cost of housing is going to go up. That means the rest of the pie is going to shrink. And then the food cost is going to go up, so the rest of the pie is going to shrink. Then your energy cost is going to go up, which means your transportation cost is going up, the rest of the pie is going to shrink. And then ultimately, the part that can shrink is your entertainment, is your travel, is your money you spend on drinks, on meeting friends and cinemas and all the stuff. Those can go away. Now, think about it. If all that has gone away and then nothing else left, you only have mortgage to pay, you only have food cost to pay, you only have transportation to pay. Most people think mortgage will be the last one people default on, which is normally the case. However, here's the dramatic however part. And I know I have first-hand experience with this because in 2007, 2008, I was betting on the housing price collapsing in the United States. However, here's the fact. If, as an owner of a property, if you anticipate the value of your property is going to drop dramatically over the next 3 to 5 years, and your interest rate go up, and your mortgage rate go up, what would you do? What's the financially speaking the most responsible thing to do? The most responsible thing to do is not continue to pay your mortgage, because you're paying mortgage for an asset that's depreciating, like a car. So instead, you just treat the house like a car, which means you're going to put the house, give the key back to the lender. Say, I can't afford it anymore, I lost my job, or I need food on the table, therefore, I will return the house to you, to the lender. And the main reason for that to happen is not because mortgage rate goes up. Most people get that one wrong. It's because once people realize prices are falling, when real estate prices are falling, people suddenly then no longer have the interest, pun intended, to continue to pay interest on a mortgage that is financing a depreciating asset. So once your house become a car, let's just say that, imagine you're driving a $100,000 car. We all know the car price will never go up unless it's a special car. So every time you pay the power payment, you know the value just go down the drain. You will never get the money back, but that's part of your cost. That's fine. But imagine your mortgage payment of a few $1,000s a month. Not only you're paying for the mortgage, you're paying for the maintenance, you're paying for the council fees. On top of that, for all the things you pay, every year the asset you own that you finance for your mortgage drop more than what you're paying into the asset as a mortgage. And you're stuck with that thing for 30 years. How does that make you feel? People are smart. Once the housing price starts to drop by more than 5% a year consecutively for more than 3 years, people don't want to finance that anymore. And the smartest people know this is going to happen, so they sell first. They don't talk about it. They sell it first. That's the reason famous companies like Sunland, big property developer in Gold Coast, they are closing down the business. They don't even think there's any chance left for them to make money. So they just close down the business, liquidate everything. All this is because strategically speaking, there's no value in the real estate market. It doesn't mean you shouldn't be going to the market to buy something. I'm talking about generic terms. So this friend of mine who's buying a property made an offer for 2.4 million. For all you know, this might be a special deal. For all you know, the true value of this property is $3 million, and this person's getting a bargain. If that is the case, congratulations, because I'm the same. I will be in the market buying real estate again. Right now, I don't own anything, but I will be coming back. However, I want to give this as a general advice to everybody who's thinking about real estate as an asset class. This is going to destroy you. The coming real estate bubble bursting in Australia-wide, is going to destroy people's livelihood. The builders are going to collapse. The financing company is going to collapse. The banks will have trouble collecting the mortgage. There will be a flood of properties coming onto the market for liquidation. Mortgagee sale is going to skyrocket. Mortgagee sale is going to skyrocket. Mark my word for that. So under all that circumstances, you should only buy your real estate if you know exactly what you're doing. Otherwise, don't do it. Just don't do it. But this person I'm making this video for, this person has ample experience in real estate. So I trust that my friend is experienced. The person knows exactly what this person is doing. Therefore, I have high confidence this deal is a good deal. But that does not apply to everyone else out there in the world. If you're just average person, you don't have enough experience, real estate is the one asset class you want to avoid at all costs in the next 3 to 5 years. And what should you be doing with the money? So step one, if you have any real estate, you should liquidate it. And it's not going to be easy because transaction is difficult in real estate. Even at the best of times, it takes 3 to 5 months. In the worst of times, it can take years and years and years. I snap up real estate during the worst of times, and some of those assets stays on the market for 10 years, 15 years, and nobody wants to touch them. So liquidity is the main problem in real estate. Now is probably the last chance for anybody to exit your real estate holding. Take the opportunity. You're not selling at the absolute top, but you're selling on the top, over the top, on the way down, which is still better than not selling at all. Because from here onwards, the food price increase, the energy price increase, the interest rate increase, and the job losses caused by deglobalization. I don't even call it localization, I call it deglobalization, because China is shutting down right now. Europe is still in a war, it might get worse, and US is escalating in their own internal issues. There's no source of growth anywhere to be seen. In this case, we're going to have severe economic contraction worldwide in real term, not in nominal term. In nominal term, everyone is going to print money, like what happened to Turkey and many other countries. So now let me talk about crypto. I promise I'm going to talk about crypto. Here's the thing. Crypto is the savings grace for a lot of places because cryptos are not limited by boundary. Cryptos are limited not by central banks. If you choose the right crypto like Bitcoin, Bitcoin Cash, Ethereum, there's a strict supply in those cryptos, and therefore they become the lifeboat of financial safety in the future. And now we just had a major crash in crypto prices. That means the cards have been mixed again, they got reshuffled, the weak players got squeezed out, the new players come into the market. And all this money, the trillions and trillions of dollars in the real estate market worldwide, and then to a certain extent connected to that, you have trillions and trillions of dollars of bond market. Because in real estate, every real estate is attached to a bond. Don't forget that. There's a debt instrument associated usually with the real estate. Unless you know everyone owns the property outright. Do you? No, you don't. So when real estate market collapsed, the bond market collapsed. And the one bond market collapse, every other financial paper asset will collapse. So it's a very simplistic way of looking at things. I know that. And I won't be able to predict every single small detail in the market. But one thing's for certain, we are at the early stage of a hyperinflationary depression. The hyperinflation does not happen in real estate right away. Instead, it's going to happen in food costs, energy cost, cost of living, anything associated with basic necessities. So if you talk about investment themes, there's many things I could think of. Food, the standard thing when I think about food is not invest in food directly. Instead, I think about farmland, fertilizers, potash, for example. I used to invest in a company called Potash in Canada. I haven't touched that for a while. I need to take a look at that again. They are now with the situation in Ukraine. They make a lot. They produce a lot of grain, and Russia itself is also a grain producer. And then so many things. I'm not gonna cover every single topic in such a Sunday video. All I want to say is this: there's so much risk in the market right now, so little opportunity. Are you sure you want to mortgage yourself for the next 30 years for an asset that's most likely is going to drop in value and pay $2.2 million for it? The only way for this to work out is that property is a cash flow positive property. If that property is a cash flow positive property, then congratulations. As long as you can keep the cash flow positive, there's no way for you to lose money. Simple as that. Okay, enough of video. I think a friend of mine just texted me. Yep, that's good. Shout out to my friend. He's coming to meet me in the next 5 minutes. Then I'm gonna go for lunch. All right, that's good enough for a Sunday video. See you around. And think again if you want to pay $2.2 million in Melbourne. Okay, see ya. Bye.